Good afternoon, everyone. This is T3 Live Editor-in-Chief John Darsie here for the daily recap. We got some ugly action today in the market. It was a triple witching Friday. I said quad witching in the morning call. My bad. Triple witching Friday. Sometimes we say expect quiet action. Today we didn't get quiet action. We got a lot of, like I said, really ugly action in a lot of stocks. We saw the S&P give back all of its gains from Wednesday's surprising QE no taper announcement. And what we talked about in the morning note this morning, if you're on that newsletter list and in the morning call post, if you checked on the website, is sometimes you get diminishing returns from things like QE. And on Wednesday, everybody expected the Fed to taper. It's the third round of quantitative easing. Everybody was expecting us to head in the opposite direction. And it was basically like getting another round of QE, honestly. The fact they didn't taper was almost like QE4, and the market ignited off of that. People said, oh, wow, there's a whole new bull market that's going to build, a new bull market in stocks, a new bull market in precious metals. This whole bond trade is going to be flipped on its head. And that lasted for all of 2 days. You'll see if this is a retest and then we are able to bounce. But today's action is really ugly, not the type of action that tells you, oh, this is a healthy pull-in that we're going to bounce from. But this market has been resilient. That's been the name of the game in 2013. But again, some really ugly candlesticks on several stocks. But then again, you saw some nice divergences too from some recent leaders. So you take a look at the chart of the SPY, you can see really ugly action today. I guess you could call it sort of a retest of this prior breakout. We traded down to the 8-day moving average. After Wednesday's igniting bar, we reached our most oversold levels of the year. So it made sense to get a little bit of a pull-in or at least some sort of rest. Rest has been sort of the ingredient for the market this year rather than steep, sharp pull-ins. But after yesterday's rest, we talked about, will the spiders hold in the top third of that Wednesday igniting bar? Obviously, they did not. Lost all those gains. Dow dropped about 170 points. All indices pretty ugly. Take a look at the Qs. It actually held up better. So one thing we talked about after that Wednesday igniting bar was that a lot of rate-sensitive assets were the ones that performed strongest on that surprising Fed taper announcement. And we talked about XLU. That was one that ignited on that announcement. Doink gave back all those gains in 2 days. Big gap down this morning, showing relative strength pre-market, and then very weak during the session to give back all those gains. Again, the shelf life, diminishing returns on that QE, that the fact that we didn't taper felt like QE4, like I said. I take a look at the chart of GLD. Everybody said, oh, new bull market building in the precious metals, new bull market in gold. Doink, big gap down this morning, gave back, once again, most of those gains from Wednesday. Really ugly looking chart. Doesn't look like the type of chart that's going to turn right back around and go higher. And I, in general, am bullish or bearish on gold. Silver, even more doink. Traded all the way down. It showed relative strength on Wednesday. It showed relative weakness the last 2 days. It's just a little bit more volatile right now than gold, trading in a bigger range percentage-wise. But then again, we did see some healthy action. Like I said, we saw some divergences from recent tech leaders. So if you want to be a stock picker, which I think is an absolute no-brainer in this market, the indices, I don't feel like you have much of an edge at all trading them. If you're sitting there buying and selling and buying puts and calls on the spiders and stuff like that, I think you're doing yourself a disservice. There's a number of stocks in this market that I want to keep harping on it that are showing really great divergences that you can, you want to be a top-down technical analyst. You want to start with the market, then go to sectors, then go to stocks. But then again, there's just a handful of stocks that you can almost close your eyes, not even look at the broader markets, and you can see really great action there. You talk about Facebook making another new all-time high today. After that earnings gap and go, we talked about this is one that completely changed character when you get a disruptive gap like that. So we were talking about looking to buy every dip. The $36 level is one that we pounded the table on and off the charts in the active trader mentoring room in the VTF. And we got an incredible bounce off that level. People were scared to chase Facebook after it's this big earnings gap and go. And since then, it's up 50%. So we talk about disruptive earnings gaps, and psychology and conventional wisdom would say, oh, Facebook made that big move, you can't chase it. Everything about that chart recently has told us this thing is going higher, look to buy dips. It hasn't broken, it hasn't even touched its 21-day moving average, or even close to touched it since that earnings gap and go. The 8-day has barely been breached. It was a breach for a day, and then we came back above it. That's what you call a king and queen candlestick formation right there. When you have a igniting bar lower that sort of tells you be cautious, and then the next day you engulf that entire bar, that is extremely bullish, and naturally it led to 3 more days higher. So really impressive action from Facebook. Like I've been saying in every video I've done for the past few months since this earnings gap and go, or since the last month and a half since the earnings gap and go, I expect this thing in the 50s and even perhaps beyond. they've really figured out mobile, which was the big question mark for them. So I think this is one you continue to buy on dips. Tesla, another one that's just absolutely incredible. The valuation, as is well publicized, is way out of control, but people are treating this not like an automobile company. They're treating it like a tech company that's changing the world, and you could say that they are. They have electric cars right now. That's really their whole business. If you talk about very optimistic assumptions based on their electric car business, you'd say, yeah, this valuation is more than double anything that you could even fathom. But they're also talking about building self-driving cars. Even their CEO came out and said it wouldn't be a bad idea to short the stock at this level. He's come out and said he thinks it's a little bit overvalued, and the company hasn't done anything to justify this valuation. Not even that's enough to derail Tesla. Everybody wants to own this stock. Institutions want to own it. It's one for the future, obviously very speculative, but especially if you're a short-term trader, this one still has a big short interest. You'd be doing yourself, again, a disservice if you're not paying attention to this name, if you're sitting there trying to trade the spiders, trying to have a bias based on opinions about what the Fed's doing, what the government's doing. Ignore all that. Focus on the price action and focus on the stocks that are moving and giving you opportunity. Amazing action today in Tesla. But then on the other hand, we saw a handful of these recent tech leaders, some of these new media type stocks, recent IPOs in the last 18, 24 months. The froth came a little bit out of them today. You talk about a stock like Zillow. Zillow is one that people just have been absolutely buying, up. It's one that held its 21-day moving average for the most part since the summer and really became one of the leaders of the market. But today's action, extremely bearish. When you get that type of igniting bar, like I've talked about, you have to take notice, and it usually leads to more downside. It was able to close significantly off its lows, which gives you a little bit of hope. But what you're going to want to see is Zillow take back most of today's candlestick if it's going to regain bullish composure. It broke out of this upper, you could have used this upper range to stop yourself out or potentially trigger another buy entry. Yesterday, it had a little bit of a breakout failure, so that was your first clue. And obviously today should be a definite sign to take some caution there in Zillow. But I think it'll be one that will continue to provide you beta, a lot of nice volatility to trade, one you should definitely keep an eye on. Another one that held up okay today was Pandora, and one that I anticipated selling off a little bit more sharply today, and I still think it will. That's just my opinion. But iTunes came out with their radio, which has gotten really good reviews. They got a lot of buzz today on the Twitter feed and in the blogosphere and stuff like that. And you got everyone running out to get the new iPhone. And I think there's just a lot of momentum towards that. There's going to be a lot of momentum towards that Apple radio. And all it would take to derail the growth story on Pandora would be a slight competition from something like the Apple iTunes radio. The valuation on this, the multiple on it, is absolutely astronomical. It shrugged off a secondary offering. They're talking about potential acquisitions with that new capital that they raised. But I didn't love the business model in the first place of Pandora. And then especially with a really strong competitor like the Apple iTunes radio, I expect its market share to be diminished by that. And I think the house of cards, if you want to call it that, could come crashing down a little bit. So many of these stocks have so much froth in them. You could say the same thing about Tesla, but until the price action confirms it, you got to keep your opinions to yourself and just trade a level versus a level if you're going to be looking for moves lower in these types of stocks. So you got a doji today in Pandora. If you go take a look at the chart again, you got a doji candlestick. I would use today's low as a point of reference, and obviously today's high. So it's sort of like Mike Lee and Steve LeVay doing their trade the open room with the 5-minute high-low trade. You can do the same thing on daily charts. Use the previous day's high and low, especially if you get a decent range after sort of a doji type candlestick, and use that to gauge your trade-off. YELP is another example of one that's really been strong. It just sort of rested today, so healthy action there in YELP. Google, really strong today. It's sector rotation. I talked about resiliency being the name of the game in 2013. Sector rotation might be even more a name of the game. It's almost like a sports team where one player is having a bad game, the other guy comes in and picks up the slack, and they win the World Series. But Google was weak yesterday, while some other stocks were really strong. Today it picked up the slack and actually had a nice gain today. So you could use yesterday's high as your point of reference there. One that I could see definitely getting back to these previous highs here, this pivot high, which represents all-time highs for Google. So continue to rotate. I think right now you have to continue to take a short-term sniper type approach, a tactical approach, as Scott would say, because right now there's a lot of different cross currents blowing in the market. You have everybody sort of up in arms about how the Fed didn't taper in September. Everything was set up for them to taper. They set expectations that they were going to taper, and I think they did themselves a little bit of a disservice. I keep using that word. They made a mistake, I think, by not taking advantage of this moment to taper. The market was at all-time highs. People were already expecting it. It was priced into a lot of different markets, and now you have even more controversy surrounding the Fed and QE. And are they going to taper in October in the middle of the debt ceiling debate? Probably not. Are they going to taper a few days before Christmas? Maybe, but that's not really ideal either. So when are they going to taper? Early 2014 seems to be what most people think now. So you're going to get this easy money continuing. They're worried about inflation being too low, but I think some of the unintended consequences of QE could come to roost in the next year to two once they wind down QE. And I think the further they stretch this market to the upside, it could be eventually the harder it comes down. But we're not going to fear monger here. We're going to take the price action as it comes. If that moment does arrive, we won't be afraid to take that perspective either. But right now, we've been hammering the bullish side of the market this year. Scott's been the leader of that ship. And right now, today's action was ugly, but we'll gauge the action over the next few days, next week, to see what it leads to and what levels get broken if we do continue to the downside. This has been John Darsie here for your daily recap. We'll see you out here Monday morning for the morning call.